what's up guys? Jesse Cohen here again for Investing.com. We're at the start of a major week in global financial markets and on Wall Street specifically. Not only is it the busiest week of the Q4 earnings season, which includes a number of high-profile reports from some of the biggest names in the market. We also have a key Federal Reserve meeting on tap, as well as Q1 GDP data. So obviously, there's a lot in store for the week ahead. So today's video will cover the 5 biggest tech stocks due to report earnings in the coming weeks. Of course, Apple, Microsoft, Amazon, Google parent Alphabet, and Facebook are some of the names I'll be speaking about. We'll also have something for all you Tesla and Neo bulls. And of course, we can't have a video on this morning without talking about GameStop and the remarkable run that stock is having. So let's get it started off. Before we do that, don't forget to hit the like button and the subscribe button in order to help support the channel. And of course, you'll get up-to-date notifications on when new videos drop. So let's get started off. This is what I'm looking at in the week ahead. Obviously, stocks on Wall Street have been shooting higher ever since, of course, the March 23rd low. We have seen the market take the next leg higher following the election of President Joe Biden. So the reaction on Wall Street obviously has been favorable. We see the NASDAQ leading the charge higher with the S&P and the Dow lagging behind, as of course the big name tech stocks have been fueling the rally, and most of it has been made possible, of course, by these 3 folks right here. We have the tag team stimulus champions of the world, Fed Chair Jay Powell, incoming Treasury Secretary Janet Yellen right here, who of course back in her day was a Fed Chair as well, and President-elect Joe Biden, who is working on his $1.9 trillion stimulus program. So obviously, Wall Street is expecting more stimulus, which has been the main driver of stocks in recent years, really. So the Fed and the Treasury now, to a further extent, with Yellen running the show over there, are expected to continue to pump liquidity into the market. So that should help, of course, markets move higher in the coming weeks and months ahead. So like I said, it's a busy week in earnings. We have a lot of big name companies ahead. Most of the ones I'm watching, of course, like I mentioned, are the big name tech stocks. Microsoft kicks things off on Tuesday after the bell. We have Apple, Tesla, and Facebook all reporting together Wednesday after the bell. So get your popcorn ready for that one. And in the following week ahead, of course, we have Google parent Alphabet and Amazon reporting their results as well. So those are the ones I'm watching, of course. Microsoft, Apple, Google, Facebook, Amazon, the biggest names in the market with the biggest market caps, of course. So the S&P 500 will, of course, see a reaction following earnings from those names. And for the most part, what we're expecting is a favorable reaction, more reasons for the market to take their next leg higher. So let's start off with the first name I'm watching, of course, Apple, with a market cap of almost $2.4 trillion. It is the largest name trading on the market. It's had a remarkable run when you take a look at the chart. Looks like it wants to break out of its recent range right here. Just hit all-time highs above the $140 level. Of course, it was pre-stock split back in August, so this thing would have been much higher than 140. Looking at where we were back in March at the lows, almost under $60. So really what has led the growth higher for Apple has been the positive reaction to the launch of the new iPhone 12 5G models. So what we're looking for is a big holiday shopping season from Apple when it reports its results after Wednesday's closing bell. Revenue is expected to reach an all-time high. In addition to, of course, EPS and revenue, we'll be paying close attention to growth in Apple's wearables segment, with the AirPods fueling growth in that business. And of course, any updates on iPad and Mac sales they're expected to have another solid quarter due to the stay-at-home measures, with more students more students staying at home, learning remotely. The same goes for market professionals who are also working remotely in the current environment. So for the most part, we like Apple heading into earnings. I think the reaction will be favorable. The next leg higher to the $200 mark from here should begin following its results. So now would be a good time, in my opinion, to buy Apple. Despite lofty valuations, it's been a market leader, and history shows that market leaders tend to keep on leading and keep on winning. So keeping with that trend of market leaders, another one of those names, of course, is Microsoft. The tech behemoth has had a remarkable run over the last 12 months, thanks to a bump in demand in its cloud-based services and offerings. So we like, of course, Microsoft heading into results with a market cap of $1.7 trillion. It's the second largest company trading on the US stock market. It reports its earnings on Tuesday after the bell. And when you look at the stock right here at the chart, another big thumbs up for Microsoft. It looks like it wants to break out of its base right here. It's been trading in this range ever since hitting that all-time high back in early September. Finally, it looks like it wants to break above, and earnings this week could be that catalyst. We're expecting a massive beat on both EPS and revenue, thanks to strong demand for its cloud computing products. Its Azure business, of course, has been fueling that growth for Microsoft. Taking it into account, a company as mature as Microsoft, it has been growing almost like a tech, with some of these unicorn tech, it has been growing thanks to, of course, high growth rates in its cloud-based businesses, and we like that heading into earnings. Another name we like heading into results, of course, is Amazon. It reports on February 2nd after the closing bell. Widely viewed as one of the biggest winners of the coronavirus outbreak, Amazon has significantly outperformed the broader market over the last 12 months, thanks in most part to Americans accelerating their shift to online shopping during the pandemic. But not only has it been enjoying strong growth on the e-commerce front, its booming cloud computing business, of course, will also be in focus. Amazon Web Services revenue jumped almost 30% in the third quarter, so we're expecting another strong quarter of growth rates of around 25 to 30% as well. So Amazon looks like another big winner when you look at the chart where we were back in March at the lows, under 2000, and where we are right now. Looks like it wants to, similar to Apple and Microsoft, it's been trading in that range and looks like it wants to break higher as it builds its base for the next run. So despite worries over antitrust reform, amid allegations that the company monopolizes its services, Amazon still looks like a good bet going forward. One of the best names to own in recent years. And like I mentioned with Apple and Microsoft, market leaders tend to keep on leading, they tend to keep on winning, and Amazon, of course, fits that bill. On to our next name, Google parent Alphabet. it had a remarkable run ever since the elections, but looking back even further, similar to the other tech names, its bounce off the March lows has been remarkable to say the least. It has been building that base. When you compare it, when you compare the Google chart to the Microsoft and Amazon charts, it looks like it kind of already broke out of that base, hitting all-time highs, new all-time highs at the end of last week. From here, it looks like Alphabet does want to keep on moving higher. With earnings coming up on February 2nd, it reports the same day as Amazon, so that will be a busy after-hours session as well. It looks like Google parent Alphabet, it has seen the worst of the negative impact of the COVID crisis on its core search business kind of fade away, and that business has been recovering. In addition to that, its Google Cloud platform has been seeing a surge in demand, growing 45% in the last quarter. So we're expecting more another blowout result from Google when it reports its earnings as well. A cause for concern, however, is of course recent news that the Department of Justice will file an antitrust suit against Google. However, investors are kind of looking past that. At the end of the day, we're not expecting a major fine. For Google, we have seen them been slapped with multi-million-dollar fines in the past, and in Europe as well. But it's always been noise, background noise for all these names really. Apple, Microsoft, Amazon. Our next name, Facebook, of course, is another prime target for the regulators. However, they kind of keep on shrugging, keep on trucking higher, keep on marching higher, and we expect that to continue as well. So Google parent Alphabet, another name to like into earnings. Our next name, of course, Facebook, with a market cap of $780 billion. It's the only FANG name with a valuation under $1 trillion. Out of all the names mentioned, Facebook is probably the name with the major headwinds when you take into account concerns over its handling of hate speech and misinformation on its social media platforms. With that being said, the social media giant has still managed to grow its audience, and advertisers continue to flock to the social media platform. Facebook, perhaps in terms of advertising, you can't beat you can't beat Facebook. How many times has it happened when you talk about a product, with your significant other, with a friend or whatever, and like magic, a couple hours later, you get an advertisement in your Facebook feed for that exact product. So that's why Facebook continues to be a good bet going forward. They smashed expectations for both EPS and revenue in the third quarter, and we're expecting another solid quarter heading into its results this week, thanks to increased advertising spending during the all-important holiday shopping season. So history shows that the winning companies tend to keep on winning. I keep on repeating that because at the end of the day, it's something which has shown that the strategy continues to perform well. Another name which continues to perform well despite concerns over rich valuations, of course, Tesla. What a monster of a stock. It looks like the magnet to the $1,000 level at this point seems inevitable. I have a bunch of friends and associates who told me that back here, Tesla's a bit expensive at $470. I'll wait for the pullback. The pullback came. It was trading sideways there for a while. You got the little jump there to, of course, the $550 level. I remember talking to a friend. He told me Tesla is still expensive at this price. I was like, perhaps you should look into it though, because I don't know if we'll see that pullback. I did a video when Tesla was at $650. And said that you don't want to be that person when the stock hits $1,000 looking back and regretting not buying. Well, we're at around the $850 level right here, right now. it reports earnings Wednesday after the closing bell. And Elon Musk really, you don't want to bet against the guy with earnings coming up. That earnings call, though, should be a good one. So if you're interested in that one, Wednesday after the closing bell this week, Tesla results come out as well. Another EV name which has taken the market by storm lately, NIO. The run has been remarkable, up more than 1,000% over the last 12 months. It's been enjoying, of course, the increased buzz surrounding the EV sector, similar to Tesla. NIO is another hot name, of course, to own. And finally, the last name I'll be watching this week, of course, is GameStop. Tip my hat off to those folks at Wall Street Bets over at Reddit. They really managed to take hold of this stock despite the short bets from Citron Research, Andrew Left. They're easily Wall Street Bets. At this point, they want to take the stock to $400? I saw over on the forum over there, one of the users commented on that. So the return of the individual retail investor has changed the entire character of the market, and GameStop is perhaps the prime example for that. In many ways, the retail investor has now become a more powerful collective force than the professional investor. So we'll continue to keep our eyes on GameStop. Obviously, it does kind of seem expensive if you're questioning whether to buy after this incredible run. It seems like we're in a buy high and sell higher market. If you think it's expensive at $65, I know pre-market gains are showing another jump of around 50%. It's going to open above $100. And if those folks on Wall Street Bets have their way, the run to 400 potentially will start. So we're still early on in the rally, potentially. So GameStop, keep your eyes on that one. Should be a good week ahead. May the trading gods be with you. Have a good one. And of course, leave me your comments if you enjoyed the video. If you have any stocks you want me to keep my eyes on or alert me to, of course, as well, I'd appreciate that. So have a good one, everybody. May the trading gods be with you.